Welcome back, everyone, to another session of Anatomy of a Trade. And I'm Franz Herr, and today Sensei Roman Bogomasov and I are going to look at a trade that was done in the summer WTC2 session in REC by student Sahil. So Roman, take it away.
All right, well, first of all, let's just go through the analysis. So we put the daily chart right here, so we could see that we were in the uptrend. We had some stop in action after some climactic volume signature, so expectation is that we are going to have some kind of reaction. We had the initial change of behavior right here on the daily, and then we go into the lower high. So our point of entry is somewhere here on the intraday. So right away, you have to think about the intention for your trade. Intention for the trade, what could that be? Could it be a campaign trade? Well, it doesn't make sense because we see the uptrend and then we're shorting it, right? So we short it right here. And is this a swing trade? Yeah, probably, just because the construct of it is that we are in some kind of consolidation within a much larger uptrend. So we are basically doing a counter to the trend trade, and that's our intention. Because of that, there are certain things that we need to consider here. First of all, our size should be less on the counter trade. Our targets should be more limited on the counter trade. And therefore, once we see the first signs of the stopping action to the downside for this intraday / swing trade, then we should be getting out. And that's our first analysis, Franz.
Yes. And taking the analysis one step further and looking at sort of the background, we definitely have this very significant bar at the extreme left at the very beginning of May that takes us up into some climactic action here at the beginning of the chart. And then we see a significant change of behavior that actually does counteract a lot of the previous up move. So I could see how the thinking here, and notice where Sahil's got the two selling zones highlighted in his chart, and looking at what's the achievability of price to move back into that area. And I think he's probably taking from that, certainly on a counter trend trade basis, the short bias that he's looking at here. So back to you, Roman. You might be muted.
Okay, thank you. So the first thing I want to say that I understand that we are shorting based on the daily reversal, right? So this bar goes up, then this one almost reverses it, covers the full body, and we are opening the position at the close. If we were to think that there is not enough space here for the counter trend in trade, let's say like we go to 1/2 like it did here, right? And we stop here. Then what is the potential? This one right here, right? And what is the stop loss? Okay, well, we put the initial stop loss somewhere here on the intraday basis. I like that. I mean, it's kind of like almost to the breakdown area. So this is a selling zone on its own, so which we don't want to overcome in the short position. I would probably try to think how I could optimize the point of entry a little bit better. I mean, for 2 days, or for a day and a half, nothing is going on. You could have entered here as well, more efficient, or here on the breakdown. And then just start thinking that if you're using the intraday, you need to get out on the intraday, which you are. You're trimming, you're adding, you're exiting on the intraday as well. But definitely the daily should play a big role. Franz, what do you think about the point of entry itself?
Well, I think, to your point earlier about this being a counter trend trade, and if we were to see, well, we do see on the small little breakout chart to the right that we see that this is really a strong uptrending stock. So I think that potentially the looking at where the short occurred and then going through that heat that we've got noted as a last point of supply is somewhat, shall we say, gutsy. I think that when we see that increase in volume on the way down, we do see supply coming in, and then we see that one big supply spike on the 18th. What's achieved by that? Well, not a whole lot. So I think we're probably thinking, okay, well, we probably still do have some sort of a bias to the downside, at least in the short term. I think that if we have a bias to the downside here, earlier you showed a potential breakdown, and I think that's where maybe the point of entry might be, either there or originally off that second top where he's got the volatility increase mark. That would be around the 16th timestamp. But yeah, from an efficiency standpoint, after that area where we see that volume spike come in, we see an attempt from the buyers right here to push price up, and then no success. That is, I think, right there, really, probably from a counter trend standpoint, the optimal entry point. But it's still, it's going to turn out to be a profitable trade for Sahil. So
I mean,
that's my observation. Go ahead.
If we are thinking like here that this is definitely still has some room to the downside, we would prefer to short even earlier, right?
Mm-hmm.
Especially if you're using the intraday time frame to conduct all of the execution, then we don't need to wait for the close here, right? So we could have entered just on the break of the local structure. That's number one. So here's your most optimal one. If you want, you could use this level right here. Also, there is an attempt to hold. There is nothing's coming in on the demand side. So enter a little bit earlier during the day, and then you have a better profile for the whole trade, something like this. So that is something to think about. I would definitely think more about the point of entry for this type of trades. I would also think a little bit more about the add-ons, right? So with the same idea, too late, and you're entering here on the break of the global structure. So this is where you might have some kind of extension, but usually when things break global structure, especially in the counter trend to the main trend, then you're gonna have some kind of slowdown right here. You're kind of gonna have some value for institutions to come in and to start buying here, and that's exactly what's going on. So again, I would be thinking maybe you break earlier would be a better add-on. And then in terms of the trim, I thought that this was a pretty awesome trim because for the first time, we are recognizing, like, even on this bar right here, what happens with the supply? We have the decrease of the supply, but we have the best up bar in this whole sequence since the top. There is nothing, well, maybe this one right here, but this is in the extremely oversold condition below the support, and then we have these two bars, and it shows the change of behavior. I wonder how much has been trimmed here. I don't mind also moving the stop loss, continuing moving the stop loss. So this makes a lot of sense to me, and exiting when that stop loss is being hit. I mean, obviously logically, right? And we moved the stop loss here logically. So I like the trim and I like the stop loss exit.
Yes, overall, pretty good exit management, pretty good trim management. So if anything, it would be the entry that needed a little bit of work and just maybe a little bit a better recognition of the overall action in the breakdown areas as the points where the entries might want to be occurring. So why don't we take a look, Roman, at the post-trade analysis. The bias, short term, yes, and I think definitely the intent of the trade is important to keep in mind here, because longer term, the bias is definitely not to the downside. So looking at the timing, yes. The character of the move for a counter trend trade, I would say yes on that. What do you think?
Mm-hmm. Yeah. Mm-hmm.
Point of entry, maybe 50-50
Mm-hmm.
based on our discussion. Good stop loss management, good add-on management, good trim management, and I don't see a problem with the exits. Do you?
Yeah. Yeah. Mm-hmm.
So overall, and I think the way the variance is being calculated here, it's the opposite. It's
Yeah.
we always look at variance off of 100% being perfect, and then taking a little bit of a ding for each mistake. And really, there's only one small mistake here, so it would be let's see, 1, 2, 3, 4, 5, 6, 7, 8, 50. It would be like 92%. In variance, I believe would be the calculation. So, and then his mistakes, what do you think about this? Shorted the outperforming stock.
It depends on when you do that. We would have to look at what the market was doing, and this is not a New York market or NASDAQ, so this is out of the US. So we would have to look at what the market is doing. You could short outperforming stocks in certain areas.
Yeah. Should have entered on KIAB. That's our shorthand for know-it-all bar, and we already talked about that. Should have been ready to exit at the selling climax after seeing an extension with a T1. So he's thinking about possibly getting out completely right there, I think. But at
I
any
like
rate,
that. I like that type of thinking. It always attracts me, to go to the perfection. So yeah, keep thinking this way. How could I improve the exit here? And I think that the key here is just to recognize selling is going down, and then we have one of the best up bars on lower volume, ease of movement. So a little bit earlier would be better, but this was perfect. I mean, this first stream was just like, I would do that for sure.
And best practices and feedback loop, taking this information. The whole purpose of doing post-trade analysis is so we can see what our mistakes and best practices are, so we can minimize our mistakes, especially if they're mistakes that we have a tendency to keep repeating, by creating rules that we follow. And the feedback loop is our method for keeping that kind of in the crosshairs. So overall, I think a nice trade by Sahil Roman, and those are basically my comments. Over to you.
Yeah. Last thought, Sahil, good trade. Some improvements on the points of entry could be done. Please keep thinking about the intention for the trade. Are we in the uptrend and we are counter trend trading, or are we in line with the trend? So that we need to understand, and it seems like you did. And just a really good trade because it's a profitable trade. So let's celebrate that. With that, that's it for this episode.
Thanks, everybody. Until next time. Thanks, Roman.
Thank you.